Hello, everybody. So today I want to go through MAX7 stock valuations. This is valid as of today, midday. So I'm going to go through each of the MAX7 stocks and tell you kind of what I think about them and their valuation and which ones I like the best. And of course, these MAX7 stocks are very important because they make up the top of the S&P 500 and the top of the QQQ. And the markets are kind of sort of at an all-time high right now, which means that these 7 companies are doing very, very well, at least as far as the stock price go, but the fundamentals may differ. So first stock I want to talk about is Apple. So Apple, to me, the problem with Apple is top line growth. There is no such thing as top line growth with Apple. The stock is up because people are excited about the new iPhone, but that's kind of a seasonal pattern, and Apple is predicted to grow only 5% than analysts, so 3 times less than the money supply. Yeah, it makes nice margins for hardware. That's kind of unheard of, actually, this margin from hardware, but you see it barely breaks the rule of 40. And Apple has allocated capital in a way that I don't really like as much. They've done enormous buybacks over the years, 800 billion plus. And, it's kind of like they make so much cash, but they're not finding a way to spend that cash in the future. They missed the electric car. They missed AI. It seems like Apple Intelligence is not working out. They had a shot at electric car. It didn't work out. They missed the hyperscaler trend. They missed servers. They missed a lot of stuff ever since Steve Jobs went away. And the Vision Pro, you may remember I made a video 2 years ago about Vision Pro, about how I thought it was an amazing product. Well, I did think it was an amazing product, but apparently I was the only one who thought that, because the Vision Pro just didn't sell. It didn't work out. They released a new Vision Pro. They barely modified anything. So the Vision Pro, as far as I see, is kind of a failure, which is too bad because that product was very interesting, but it didn't work out. We know now. So Apple, to me, I don't find it interesting. And perhaps as far as valuation go, it's the only company that I find really, really overvalued in the MAX7. Over than Tesla, but Tesla is a cult stock. Tesla is entirely different. You could argue that Tesla's valuation is very much warranted. In my view, Apple's valuation right now near all-time high, I don't think it's that warranted, especially because the top-line growth is just not there anymore. And you have risks of new computing platforms being a thing, notably Meta and the Meta glasses. Maybe down the road, 5 to 10 years from now, there will be a new computing platform. And it seems like Apple with the Vision Pro is really not catching on. So that's point number 1 about Apple. Moving on to NVIDIA. So NVIDIA is in my view, if I were to just look at the valuation, pure valuation, the most attractive stock in the MAX7, in my view, is NVIDIA. It's trading EV over GP over RG is trading at a 0.61. That's the lowest out of all of the MAX7 stocks. They also have the highest rule of 40 of all of the MAX7 stocks. Absolutely outstanding EBITDA margin. In fact, it is the highest EBITDA margin of all of MAX7 stock. Nearly the highest gross margin, not quite. Meta's gross margin is even higher, but 70% gross margin. And of course, the growth rate of NVIDIA trumps all of the other one. Their growth rate is just outstanding. And NVIDIA I find undervalued. And I think the reason why NVIDIA is undervalued is because a lot of people don't want to jump in NVIDIA because they see a $4.5 trillion, a $4.5 trillion sticker. And so they have a kind of that sticker shock price, thinking, oh, well, it's a very expensive stock because they just look at the market cap, but they don't look at it in relationship to the revenue, to how much money they make, and to how quickly they grow. As Tom Lee says, this is what Tom Lee has said multiple times in his latest interviews about NVIDIA, it's cheaper than Costco or Walmart. And this is the top of the NASDAQ and the top of the S&P. This is the biggest stock, right? NASDAQ and S&P, they own more than 10% of NVIDIA. It's the top stock in there. And in my view, it's the least valued stock. It's fairly undervalued compared to all of the MAX7 stocks. They own CUDA. CUDA is the main platform for AI, the main platform for GPU workloads, and their chips are just ahead of everybody else. I know some people love NVIDIA because they feel like NVIDIA is cheaper, but the NVIDIA chips, in my view, they are multiple steps ahead of everyone else, and even Elon Musk agrees with that and gave up Dojo. The reason why earnings came below expectation this quarter for Tesla is because Musk gave up Dojo and said, okay, we're just going to do NVIDIA and we're going to do Hardware 5. So to tell you, and when he got started, started, Musk thought that Dojo could be a thing and Dojo could work. Well, guess what? It did not catch up NVIDIA. And NVIDIA doesn't even include China. This is not even with China sales. Like if China sales were to become a thing again with a trade deal, you gotta have this stock see even more sales. So NVIDIA to me is the most undervalued stock. And they did a few buybacks, but not that many. So it's still okay. Okay, let's talk about Amazon. So Amazon is a stock, speaking of buybacks, I don't really like buybacks. To me, you're incinerating capital. You're burning capital when you do buybacks. In my view, I much prefer to see a business reinvest the cash flow into the business where they made the money in the first place. That's what Amazon is doing. Amazon did a few buybacks when the stock was very cheap in 2022, but that was it. They do very little buyback. All Amazon does is they take their money and they reinvest it. And it shows in kind of a lower rule of 40. Amazon I find pretty cheap at a 0.68. I love that they reinvest constantly in the business. It's not the most profitable Mac 7 because they have a big e-commerce division. And of course, e-commerce is competitive. There's a lot of competition out there in the commerce field, but they're still the leader in the West. And really, them being the leader in the West for e-commerce is because they developed their own network of distribution. Now, they have competition. They have had competition from Chinese players like the Temus of the world, especially in some categories like clothing, etc. But that competition in the US is essentially gone with the de minimis exemption being gone now. And, sometime in Europe, I think it's 2028 or 2029, Europe will also see the de minimis exemption go away, which should really hurt Chinese players and kind of like advantage Amazon, which does not rely on the de minimis exemption for its online shopping. The power of Amazon, of course, is customer satisfaction. It's one of the most loved companies out there. They have one of the highest net promoter score. How likely are you to recommend Amazon to your friend? That question, people saying very likely. They have the highest score, one of the highest score of any business. They have a fast-growing advertising business on the rise for the products on the platform. And of course, they have AWS. AWS has had some issues recently. A lot of people saying GCP is better, Azure is better, but AWS is still the leader in cloud computing, although they are going through a little bit of a change right now at AWS. But it's still a very much a leading company. In my view, this company is lagging the rest of the Mac 7. I think it's dirt cheap. I like Amazon. Moving on to Google. Let's talk about Google. So Google is a stock that I own. Oh, by the way, I own Google, I own NVIDIA, and obviously I own Tesla. These are all the only three Mac 7 I own are these three. Google, I call it my savings account stock. I think Google, has a huge diversification discount. Imagine if, say, YouTube was a standalone business. If YouTube was a standalone business, it would probably be $1 trillion, right? So Google has this diversification discount because they have all of these incredible apps. It goes way beyond Google search. They have these incredible apps, but they are bundled in a single company, and you see that discount. And so, to me, that's a plus that the no breakup has been confirmed. You may remember the former administration was trying to break up Google. New administration is not trying to do that. So to me, it's good because, you still can acquire the indices and the share of Google and the cheap, and Google remains cheap. So to me, it's good. But eventually, it's possible that Google will be broken up. Who knows in 2030 what type of leadership we have, and maybe they want to break up Google. The reason why I say Google, to me, is cheaper But a lot of companies is more than 9 apps with more than 1 billion users. Actually, for Gmail, I was seeing some estimates with more than 4 billion active accounts. A lot of these users have multiple accounts, but you can see Android over 3 billion users, Google Search 3.6 billion users, Chrome, think about the ascent of Chrome. Chrome is kind of a leading browser just about everywhere now, 2.65 billion users. YouTube just putting Netflix in the dust. YouTube has 2.1 billion users. The Play Store, 2.5 billion. Over 1 billion users for Maps. From Google Drive, 1 billion users. Google Photos, 1 billion users. I mean, this company is, it's kind of a meta in disguise. These are not exactly social media apps, but these apps make a lot of money. I mean, if you look at countries like India or Indonesia, you pretty much have the entire population of these countries who have a Gmail account, which is incredible. It's incredible. So this company has all of these properties, and a lot of people were creating AI fears on Google. You may remember 6 months back, Google is going to have a deep problem with AI fears. Well, guess what? Google Search is just one tiny function of the business. It's just a teeny tiny thing, and they've done a really good job at rolling out Gemini and AI mode, and now a lot of people when I talk to friends and stuff, oh yeah, I used AI for this. I'm like, what did you use? Oh, I just did a Google, and Google did the AI. So AI is getting commoditized, and Google is getting a lot of that AI generation, AI revenue. And by the way, Google is a leader, an absolute leader in AI. They are the ones who invented the GPTs. They were slow to release it, but now they are catching up. And of course, Google has a lot of real options, real opportunities that could unlock a lot of value. Waymo, I don't think Waymo is the way to scale, but these companies are still valuable. They're still going to be the number 2 player in that field. So Waymo is probably much more valuable than the market gives credit to. Their 7% ownership in SpaceX, in my view, is not represented in the valuation of Google. Google is kind of, in my view, the best way to get exposure to SpaceX. If you own Google, they own 7% of SpaceX. And then their quantum computer initiatives are very impressive with their Willow announcement, which kind of made the buzz online. So they're in the league with Microsoft. Microsoft does a lot of stuff in quantum computing as well. So Google is a quantum computing play as well, with them showing quantum supremacy, showing that they were able to execute a calculation 13,000 times faster than a traditional supercomputer. So that's a wild card that could add to the value of Google. I find Google cheap at a 1.17 when you consider all of the properties that they own. And also when you consider, for example, their software suite. Like they don't talk about their software suite here, but a lot of people just use the Excel. They use Google Sheets, they use Google Words. That eventually they started communicating on that. Maybe Google Sheets and Google Words is going to get a reach at some point. That's the same as Microsoft Office. That's also something to think about. So Google, in my view, very impressive company. Love to own it. Let's talk about Meta. So Meta is a stock that I don't own. Meta, though, is one of the best turnaround stories out there. You may remember in 2022, the stock dropped to double digits. It was in the high double digits. That was an amazing opportunity. And of course, the stock dropped on narrative that TikTok was going to kill them. And you also had the Apple privacy changes. And the narrative was, oh, there's TikTok, and then there's Apple changing the privacy changes, and Instagram is in trouble. And of course, a lot of the value of Meta is Instagram. That's a lot of the value of Meta. Well, what do you find is that Instagram has resisted very well to TikTok. It seems to be like social media kind of stick to their generation. Instagram is still an extremely popular, social media. Billions of users, very, very big, and so is WhatsApp. WhatsApp is a very valuable app, right? WhatsApp, like I said, I've said before, it disrupted SMS and text in a lot of countries. It's just WhatsApp. So you have WhatsApp and Instagram in Meta. And of course, this company is expensive at 1.8 trillion, but you can see why I like Google better. Because Google has, 1, 2, 3, 9. They have 9 apps that are enormous, right? Meta has 2 apps that are enormous, which is Instagram and WhatsApp. So to me, Meta, because it's less diversified, there's less of a diversified discount and grows a little faster. It's a little more agile at 19% growth. It's cheaper at 0.65. Now, Meta has a wild card of its own, which is, they seem to have slowed down the LLM development. I'm not sure if they're going to, Llama used to be very good, but Llama has now been surpassed. But Meta is now looking at this, the AR VR. They have had more success in their AR VR initiatives than Apple. So there's this race to know where the next computing platform is going to be. What's going to replace the phone? Is Apple going to be able to pivot and create the item that eventually creates the phone as the next computing platform, or is it going to be Meta that does that? If you look at if you've watched any tech reviews of these very much look like the future. And of course, you have a screen in there, and you can see a computer screen, and you can do a bunch of stuff, but they kind of look like regular glasses, perhaps a little bulkier than what people would like. But you can see Meta, in my view, is on a trajectory to develop the next computing platform much more than Apple is. And so we'll see. That's the wild card in Meta. And that's why you can see, as of now, index funds make so much sense. I mean, aside from Apple, which I think is overvalued, and kind of the valuation of Apple, a lot of it has to do with the buybacks that they do, and how there's always a bid on their shares because they always buy back their shares. But all of the other ones, if you ask me, I mean, Meta is not that expensive. Google, in my view, is a much steeper discount when you look at the properties. Perhaps my second least favorite stock on this list is Microsoft. Microsoft is too expensive for my blood, but Microsoft is still very impressive. 56% EBITDA margin. More than 100 million enterprises own and acquire anything Microsoft does. Think about how many companies they have paying $5 per user or $8 per users per month just to use Office Suite, and then if it's Teams, it's like $10. Amazon has a tremendous amount of revenue. They can put a lot of companies out of business by just integrating functions back into the Microsoft suite offerings. So that's what Saylor always talks about, right? Microsoft is able to just ship software and include it in a bundle and put a small company out of business very easily. They have a very dominant position in the enterprise sector. Azure is very successful. That's what people praise Satya Nadella a lot for actually not messing up the hyperscalers business, right? Which is the cloud. They did not mess up the cloud. Microsoft, of course, messed up the mobile phone. That's something that they missed. But they did not, and they messed up search, right? Online search. They missed that. They did not miss the cloud. So kudos to them. And they played their card very well with the OpenAI investment. That was a master move. If OpenAI turns out to be $1 trillion company, their chunk in OpenAI is going to be worth a lot of money. You have the quantum computing bonus in there. So they also had breakthroughs not too long ago with quantum computing. They kind of beat it out with Google to try to know who's the best at quantum computing. So anyways, I mean, it's a very solid company. I find it expensive at a 1.34 EV over GP over RG. I find it expensive. I prefer Google, even though Google looks a little expensive. Google is still cheaper, right? NVIDIA is the cheapest. But when I look at Amazon, I think about so you have a few positive at Microsoft, you have a few positive wild card like quantum computing, but you also have potentially Elon Musk, who is trying to. I mean, it's a troll. They're trying to troll them, but he's trying to launch Macrohard and to compete with Microsoft. And so Macrohard is part of this idea that you could have an AI generated software, like a software that just generates AI on the go, not generates AI, but generates the interface, generates everything on the go as you use it. And so, right now I don't think it's a threat. But Elon Musk is trying to disrupt a lot of industries, and I don't like the fact that Elon Musk is trying to target Microsoft. I don't like that fact at all. Also, because a lot of these enterprises pay based on the number of users, you also have to ask yourself: if there's a lot of AI, what's going to happen to these users? Are companies going to have less employees? And if they have less employees, will they pay less? Anyways, I'm not suggesting in any way that Microsoft is threatened. It's a very solid company, but you could have some IBMization down the road of Microsoft, is the way I'm going to say it. And my favorite Mac 7, which is also the most expensive. Actually not. Actually, I'm just seeing this right now. Actually, Apple is a little more expensive than Tesla on EV over GP over RG. Actually, it's Apple who's the most expensive. Isn't that interesting? But of course, my favorite, same valuation as Apple essentially. That's Tesla. Tesla is my favorite stock. It's the number one position in my portfolio. And Tesla, we just had the call, so these numbers are updated. Of course, biggest quarter ever for Tesla, the most sales ever that they did. And on that call, we had a lot of great news about Tesla. Robotaxi will roll out by year-end, will be in 10 cities by year-end. So Robotaxi is rolling out. Cybercab production in Q2 of 26. That's going to start. And then Elon talked about millions of Optimus robots. Even if the deadline is a few years early, even if what he says is a few years early, that's the end game. If he actually succeeds in that, that's going to be the end game, and this company will be the most powerful company in the world if Elon actually succeeds doing that. Which it seems to me like he's succeeding robotaxi and he's succeeding self-driving. So I have all my reasons to believe that he will succeed. Optimus, maybe he will be late, right? He will be late, but we've all come to expect him to be late. Megapack is rolling out and is doing really, really well. If you look at Megapack, best quarter ever, High margin on Megapack too, more than 30% net margins on Megapack, operating margin more than 30%. So quite outstanding. They never did a buyback. They keep reinvesting everything in the business, which is of course something that I love. And of course the valuation is high, and people will get hung up and say, oh, valuation's too high. Well, guess what? Apple is a bigger valuation, right? So I much prefer Tesla over Apple. And of course, we have the pay package, which, you know, a lot of dislike of this pay package is driven by jealousy. A lot of people are a little jealous, but these numbers benefit their shareholders. You know, like $4 trillion, right? That's a free, that's roughly a 3x, almost a 4x from here if he achieves a $50 billion EBITDA. Okay, well, I'm perfectly fine. If you do me a 3x or 4x, I'm fine with 141 bonus. I'm fine with that. And then you can see that's when they say the $1 trillion pay package. Well, the $1 trillion pay package, he gets it only if he gives you a 10x, roughly. So I'm fine with him getting $1 trillion if he gives me a 10x on my number one position. So again, I think this is a positive. I think this is going to go through. Most people who analyze Tesla day by day, they also think it's going to go through. So I think this is going to be a very, very meaningful company for us in the future. I like Tesla the best. I find NVIDIA the cheapest. If I were to rank them in my order of preference, I would put Tesla first, I would put NVIDIA second, and I would put Google number 3, but Google would get a special mention because I treat Google like, you know, safer than a bond. To me, Google is safer than a money market to me. That's the way I treat Google and look at Google. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you are entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.